Hello everyone, so today I will be giving an introductory overview of D.I.Y Berhad, which is Malaysia's largest home improvement retailer. So this company was founded on July 2005 and has been listed on Bursa Malaysia on October 2022. This company has grown from a single shop in Kuala Lumpur into a massive regional brand. Today, they operate over 1,400 stores nationwide and have expanded successfully into Brunei. Driven by the vision to be the most valued retailer, D.I.Y lives by the mission to offer everyone everything and every day at lower prices. They manage an impressive catalog of over 17,000 products. To strengthen their market prices, they have also established dynamic sub-brands such as Mr. Dollar, Mr. White, Mr. D.I.Y Express, and Mr. D.I.Y Plus. With this background in mind, let's pass it over to my team members to dive into our financial.
Hello everyone, today I will explain the company's main financial ratios and how they change between 2022 and 2024, starting with liquidity ratios. Liquidity ratios show how well the company can pay its short-term debts using assets and it can turn into cash quickly. The company's ratio has gone up steadily. It was 1.74 in 2022 and reached 2.38 in 2024. This means the company has enough current assets to cover all its short-term liabilities. The recent trend proves that the company management of short-term finance has improved over these 5 years. A ratio higher than one also confirms that the company is financially stable when it comes to meeting immediate payment. Next is quick ratio, which excluded inventory because selling stock takes longer to produce cash. This figure changed during the period. It started at 0.4 in 2022, went to up 0.62 in 2021, fell to 0.38 in 2022, and then increased again in 0.68 in 2024. We can see a big difference between the current ratio and the quick ratio. Although the company does not have serious cash flow problems, its ability to pay short-term costs still relies heavily on how fast it can sell its products. Now let's look at asset management ratios. This ratio shows how effectively the company uses its assets to make sales and run operations. The company's inventory turnover ratio increased from 2.13 times in 2022 to 2.33 times in 2024. The higher number means the company is managing its stock better. It sells and uses inventory more efficiently, which reduces the chance of having unsold product and help the company run operation more smoothly. Finally, the company total asset turnover ratio grew slightly from 1.14 to 1.22. Even though the increase is small, the steady improvement each year is positive. It means the company is using all its assets more efficiently to generate sales and income. This consistent growth shows that the management team is doing a good job. The company controls and uses its assets properly, which help the keep good performance and grow continuously. To sum up, this trend shows that the company's short-term financial position is stronger and it is using its resources more effectively. Thank you.
Thank you to my teammates for that clear explanation. Now I will continue our group's analysis by looking at two important areas, which is leverage and profitability for Mr. D.I.Y Group Berhad from 2022 to 2024. My name is Noanisa Humaira and I will discuss about these sections. First, let's talk about leverage. This ratio tells us how much the company relies on debt to run their business. If we look at the data, Mr. D.I.Y has done an excellent job of lowering their financial risk. We can see that the total debt ratio decreased from 0.61 in 2022 to 0.49 in 2024. This means that the company is relying less on borrow money. And we can see debt to equity ratio. It shows us The major drop falling from 1.57 down to 0.96. What does this mean? In simple words, it shows that even though the company was expanding and opening many new stores, they didn't have to take out huge loans. Instead of they use their own cash and profits to grow. This makes the company much more stable and safer from debt problems. Next, we move to profitability, which measures how well the company turns their sales into actual profit. Despite challenges like rising costs and inflation after the pandemic, the company's performance stayed very strong. In net profit margin, for the past few years, this has stayed steady between 12% and 30%. This tells us that the management is very good at controlling their daily operating costs. Return on asset, which is we call as a ROA, this stayed consistent between 14% and 16%. In 2024, it recorded 15%. Basically, this proves that Mr. D.I.Y is very efficient at using their assets like their stores and equipment to make money for the business. To wrap up my part, Mr. D.I.Y is in a very healthy position. They are consistently profitable and have successfully reduced their debt over the last 5 years. Thank you for listening. And now I will pass the presentation to the next speaker. Thank you.
Hi, my name is Nur Idani Farisha binti Muhammad Ramdan and my metric number is 313661. Now, I want to present about Mr. D.I.Y's key financial strengths. One of the strengths is its ability to expand the business while reducing its dependence on debt. Between 2022 and 2024, the company's total debt ratio decreased from 0.61 to 0.49, while its debt to equity ratio fell from 1.57 to 0.69. This indicates that Mr. D.I.Y relies less on borrowed funds and more on its own generated funds to support operation and growth. Despite lowering its debt levels, the company continued to expand by opening many new stores across Malaysia. This is a positive achievement because business expansion usually requires significant borrowing and increases financial risk. However, Mr. D.I.Y was able to finance much of its growth through strong cash flow generated from its operation. As a result, the company reduced its exposure to debt-related risks and maintained a more stable financial position. In conclusion, Mr. D.I.Y successfully achieved business growth while strengthening its financial stability, reflecting effective financial management and sustainable growth. Another financial strength of Mr. D.I.Y is its ability to maintain stable and consistent profitability over the 5-year period from 2020 to 2024. During this period, many businesses faced challenges such as inflation, rising operation costs, and supply chain disruption after the COVID-19 pandemic. Despite these difficulties, Mr. D.I.Y continued to deliver stable profit performance. The company's net profit margin remained between 12% and 13%, while its return on asset or ROA stayed within the range of 14% to 16%. These figures indicate that the company was able to generate profit efficiently and make effective use of its assets. This consistent profitability reflects strong operational management and a stable business model. By offering product at affordable price while controlling costs efficiently, Mr. D.I.Y was able to maintain customer demand and achieve steady financial performance. In conclusion, Mr. D.I.Y consistent profitability demonstrates its operational efficiency, strong management, and ability to perform well even in challenging economic conditions.
Hi, my name is Nurmalan binti Berhad. My metric number is 313699 and I will explain about financial weakness of Mr. D.I.Y Group and Berhad. The first weakness is the company high dependent on inventory for liquidity. Although the current ratio increased from 1.74 in 2020 to 2.8 in 2024, the quick ratio remaining low between 0.42 and 0.68. This show that most of the company current assets are tied up in inventory rather than cash, making it more difficult to meet immediate financial obligation if inventory sales slow down. The second weakness is low inventory turnover. The inventory turnover ratio improved only slightly from 2.13 times in 2020 to 2.33 times in 2024. This indicates that inventory takes a relatively long time to be sold, which may increase storage costs, create risk of obsolete product, and reduce cash flow flexibility. In conclusion, Mr. D.I.Y main financial weakness are its heavily reliance on inventory and its relatively slow inventory turnover performance. Next, I would like to present 2 recommendations to improve Mr. D.I.Y financial performance. First, Mr. D.I.Y can implement smarter inventory management using AI technology. By using AI-based predictive analytics, the company can analyze customer demand at different locations and allocate inventory more efficiently. This helps reduce excess stock, improve inventory turnover, and free up cash tied up in inventory. Second, Mr. D.I.Y can improve its cash flow by renegotiating supplier credit terms. Since customers pay immediately under the cash and carry business model, the company can strengthen its liquidity by extending payment period with suppliers. This allows Mr. D.I.Y to maintain higher cash balances and gain greater financial flexibility for daily operations. In conclusion, adopting AI-driven inventory management and negotiating better supply credit terms can help Mr. D.I.Y improve inventory efficiency, cash flow, and overall financial performance.
Good morning everyone, my name is Shazwa Ashrah binti Shaiful and my metric number is 313675. Based on our financial ratio analysis from 2020 to 2024, we can conclude that Mr. D.I.Y Group and Berhad show stable and positive financial performance during the 5-year period. The company improved its liquidity, used its assets efficiently, maintained consistent profits, and reduced its dependence on debt. This shows that Mr. D.I.Y managed its business operations well while continuing to grow. In addition, the company expanded its business network across Malaysia and maintained stable profit margins and healthy cash flow. Mr. D.I.Y also strengthens its market positions through affordable price, strong brand recognition, and a wide range of products. Although the company still faces challenges such as inventory management and competition from other retailers, it continues to demonstrate strong financial stability and good potential for future growth. Next, based on the company's financial performance and market position, we recommend Mr. D.I.Y Group and Berhad as a good long-term investment. The company shows stable profit, strong cash flow, and lower financial risk over the past 5 years. Besides that, its strong brand name and continuous business expansions give good potential for future growth. Although the company faced some challenges such as strong competition and inventory management issues, Mr. D.I.Y still has strong business fundamentals and stable operations. Therefore, the company is suitable for investors who want stable and sustainable returns in the future. Overall, Mr. D.I.Y Group and Berhad is considered a strong and promising investment in Malaysia's retail industry.